Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day, the trading week. Romaine Bostick, Hyde, Taylor Riggs, counting you down to the closing bell. Here to help take us beyond the bell, our global simulcast team, Carol Massar and Tim Stenovec, bringing together our Bloomberg Television, radio, and YouTube audiences worldwide to parse the crucial moments of the day. Carol, it's been quite a day, quite a week.
Yeah, quite a day, quite a week. And especially for those technology names, Romaine, we see that really going to be the laggard for the week overall. We've been talking a lot about what's going on with COVID right now and the rise in Delta cases. It's really concentrated in about 4 states here in the United States, but it's hard. And I think investors, that's part of their, wall of worry when they start to see cases rising, Tim, here in the United States.
Yeah, it certainly seems to be a case as markets took a leg lower later in the day. It does seem like we are going to finish off our session lows on the major indices, but we are on track for a losing week with the NASDAQ poised to finish the day, or finish the week, I should say, down by more than 1.8%, the S&P down by 1%, and the Dow Jones, Caroline, finishing the week down by just about half a percentage point.
Flip-flopping is what Mike Wilson at Morgan Stanley called it. And one day you're talking about getting into value, the next day you're talking about getting into growth. Taylor, it feels like you're getting into neither today because big tech is not your area of, well, safety for the day.
We're having a huge debate on TV, you guys. If flip-flop or unch is a better technical term as we head into Romaine CFA level 3.
I was going to ask if they tell you that for your CFA.
I'm skipping that. I'm going straight to level 3.5 or something here. It's like being John Malkovich. There's a whole nother floor in between here. But look, guys, we came into today, this week, I should say, we had that Bank of America Fund Manager survey that actually really talked about this idea that the cyclical boom said it might have peaked. At least that's the sentiment of a lot of fund managers here. And I guess you saw that reflected to a certain extent in the market this week with a lot of those cyclical stocks selling off here. On this day, you're seeing pretty much everything sell off. The Dow Jones Industrial Average right now down about 300 points. That's down about 0.9% here on the day. We should point out the S&P 500 right now also down about 0.8% as well as is the NASDAQ Composite. All three of those indices are red on the week, with the NASDAQ being the worst, down about 2%. But going back to those cyclical stocks here, the Russell 2000 looks like it's going to finish the week down by about 5%. This is the worst weekly loss that we've seen for the Russell going back to the end of October here. And I think that does show you, just to a certain extent, that some people are maybe a little bit risk averse here, Carol.
Yeah, Russell's still up 9% for the year, but that's a big pullback in that average in particular. And I know this isn't my world, it's really Taylor's world, but Taylor, I got to say, I've been watching the bond market throughout the week. I think it's telling a very distinct story about the expectations for rates going forward. We had Jay Powell talk about it a lot this week, but also maybe concerns about economic growth coming back now, but what happens a little bit later this year.
Well, and you really see those bond proxy equity sectors back up in the lead as yields have really come down. Like you mentioned, Carol, take a look for our radio audience. It is the winners and the losers. Hate to say it, a lot of losers in the green. That's the issue underway. But for the gainers, it is utilities, right? It's some of this hardware equipment, some of those sectors that really benefit from yields falling. You're up anywhere from 0.3% to 1.25%. But we go down to some of the losers. It's really this reflationary trade. You're out of materials, banks, and energy. You're off anywhere from 1.5% to 3%, Carol, as bond proxies are getting hit some of the worst.
Yeah, totally. All right, so let's get to some of the gainers. Guys, you know who had a really good week this week? Moderna. It was up 23% this week overall, another 10% bump today. It's been on my gainer list for the last 3 consecutive days. Hit $100 billion market cap this week. We know that. And then, of course, after the close yesterday, we heard that it's going to be joining the S&P 500 before the opening of trading on July 21st, so up another 10% today. Another big gainer, Cintas Corporation. They make uniforms. It was a top gainer in the S&P 500, up 4.6%. Morgan saying the company's fourth quarter results were solid, raising its price target to $353 from $333. Stock closing at $386 and change, so they're still below that. And Zoom caught my attention. No real reason, but it's up about 26% from its May low, off around 9% since July 6th, so we've seen volatility. We are going to get earnings in late August, so we'll see if that Zoom, that pandemic play, whether or not it continues to see some momentum.
Right? No more Zooms.
We all are sick of Zoom.
Maybe we'll be back to Zooming. I really hope not.
You're going to be Zooming soon.
Maybe. I don't know. It was no difficulty to find decliners today with nearly 350 stocks in the S&P 500 lower for the day. Taiwan Semiconductor Manufacturing Company, though, finishing the day, the ADR is down by more than 1.5%. The company's gross margins disappointed investors. These investors thought that global chip shortage would benefit the company. Not as much as they had hoped, though. We had Anand Srinivasan on the show, senior semiconductor and hardware analyst, and he said that
on our show too.
Inflation.
That guy gets around.
He does. I saw him on TV right before he came on our show. But he said, hey, this is also an inflation story. The company's paying higher input costs, and they can only pass so much on to the customer, so margins are going to take a hit there. Also watching travel, shares of cruise lines falling today. The news about cases of the Delta variant spreading throughout the U.S. could not be helping. Carnival Corporation, Caroline, finishing the day down nearly 4.7%. Norwegian Cruise Line Holding Company down more than 5.3%, Caroline.
And it's interesting that we've seen that worry about getting back out traveling really pervasive in, well, the foreign currency market. I'm going cross-asset, and the British pound off by 0.5%. This is, once again, they're meant to be reopening July 19th, but they're suddenly saying if you're coming back from France and you're fully vaccinated, I'm afraid you're going to have to quarantine. There's worries about the Delta variant in the United Kingdom. Many, therefore, just taking their chips off the table when it comes to the British pound. In fact, this is a story of most currencies falling against the US dollar. US dollar on track to have its best week in a month at the moment as we see search for safety. Aussie dollar falls 0.4%. Interesting, though, that the Kiwi did well today. The New Zealand economy once again showing signs of inflation. Maybe we'll see central bank moves there. More hawkish tones coming from plenty of central banks, but not the Federal Reserve. Well, at least not from Chair Powell. Commodities, a mixed picture on this particular vertical, but oil having its worst week since March that you can see at the moment. So that's on a story of dollar strength and also expectation of supply coming from OPEC+. Also tin on a tear. That's the new lumber. Lumber comes down, of course, on the week.
That's the new lumber? Wow.
Yeah, I'm calling it.
Everybody's saying it. Everybody's
first.
saying it.
Tin is the new lumber in terms of where the money is going, is at record high in terms of tin. A mixed picture when you're looking at the bond market, but UK yields getting a bid amid this sort of cautious note that's happening in terms of COVID there.
How do I top tin on a tear? How does one follow that? Let's try it with yields. Bond prices higher, yields lower. That's what we do. Today, you're getting mostly unch on the day. On a weekly note, you were down pretty much across the board, starting at 2% to a 192, a 136 to a 130. You know the theme. And Carol, what was so interesting is this was a week when you had CPI, PPI, retail sales, hot, and yet the consumer sentiment saying inflation looks the hottest it's been since August 2008. I don't think so. How is that impacting real wages? And yet the bonds don't move.
Right, exactly. I mean, that consumer sentiment number from the University of Michigan, this is something that we watch really closely and moving back, and that also weighed on the trade. We're going to be watching those consumers so closely, right, that crucial to the economy, Romaine. And so if we start to see some negativity, and especially, I mean, those retail sales numbers, they came in strong, but there were some concerns about, downward revisions to May, so they weren't such a clean number.
Yeah, and some concerns here about maybe people just kind of stocking up on some things they need now. It'll be interesting to see what happens going forward. Don't forget, next week, of course, we get a ton of companies reporting here across the board, including in the restaurant space. Chipotle is going to be reporting, Netflix. We'll get a chance to see Texas Instruments, and of course, a few industrial companies like Union Pacific and American Airlines. So it'll be interesting to see what these companies say about the economy, about how people are spending, about margin pressures, about supply chain issues.
Yeah, Biogen, American Airlines, Snap, Intel, J&J, Verizon, Harley-Davidson, as you mentioned, CSX, the list goes on. I'm interested to hear about outlook. I want to know about labor shortages. How difficult is it to attract and retain talent? Are costs going up, similar to what we saw with the big banks, and the big banks having to pay employees more to stay? That's the question.
Yeah, exactly. Having to pay more, whether the wage inflation actually becomes a reality, because at the moment the wages, well, they're not rising as fast as inflation has been. Maybe that's some of the concern as to why people are worried about the sentiment, whether inflation does hold them back in the right here and now, Taylor.
We had a killer chart on the 3F. We can put this out for the radio audience showing disposable income, real wages on a year-over-year basis. You're down 1% because, of course, wages not keeping up with inflation. Carol, something I know, Romaine, that we will be watching.
Yeah.
Guess what else we are watching?
Well, I mean, you bring this point up on wages and stuff. I actually spoke, there's a chart for our TV audience there, but for those of you listening here, I spoke with Stephanie Kelton, of course, became famous writing the Deficit Myth book, of course, professor over at Stony Brook University, big MMT proponent. But we talked a lot about this issue of whether there is persistent inflation, and more importantly, whether it should matter. And of course, she's kind of in the camp here that fiscal policy maybe shouldn't pay as much of attention to it as we have. She's going to be appearing on Wall Street Week. That's coming up at 6 p.m. Later tonight, guys.
Well, looking forward to that. And Blue Origin, we're going to talk about that next week because Tim's getting ready to head out west. But
I'll
we'll
miss
be
you
covering
guys,
that.
okay? I won't be too
Tim,
far away.
You're going to space again?
Yeah.
Are you going to
miss you.
Texas?
He gets all the great.
I'll see you late next week.
You're going above the Carmen line this time, right?
I wish.
He's really going into space. All right, that's going to do it.
28 million.
That's going to do it for our cross-platform coverage
How about?
on this Friday on Bloomberg Radio, Bloomberg TV, and on YouTube. Have a great weekend, everyone. We'll see you again on Monday, same time, same place.